Copytraders Club, where you can learn how to make better decisions and more money copy trading. I'm Gavin Macaulay, my name and username on eToro. Today, we talk to the undisputed #1 creator of eToro content. Here we go. Episode 10 of the Copytraders Club podcast, and as always, my aim as an eToro enthusiast and copy trader is to demystify this new and uncharted world of copy trading, understand what are the pitfalls and best practices, and how ultimately to succeed as a copy trader. In this episode, I talk to Andrew Hadden, the man behind the incomparable FelixFallax YouTube channel, to which any self-respecting eTorian simply must be subscribed. He single-handedly inspired my interest in eToro and has done more to educate and encourage me than anyone else, including eToro. Always fun and interesting when he swings by the Copytraders Clubhouse. And here he comes now. Andrew, hello. Welcome to Copytraders Club again.
Hello, Gavin. It's great to be back for a record-breaking fourth time, and many congratulations on what you've been doing with the podcast so far in season 2.
Well, many congratulations to you for, as you say, making it back for appearance number 4. Always a delight to have you. And, of course, given that you were so instrumental in the early days of Copytraders Club and you've become something of a semi-regular, you have a special pass and you don't need to go through the quickfire questions. You've got permanent security clearance.
That's much appreciated. I'm enjoying my newfound freedom around the Copytraders Clubhouse.
So how are you doing?
I'm doing well. I'm still enjoying my eToro experience, including my YouTube channel and my own trading that I'm doing there. And really, I'm enjoying the whole thing, and life in general is going well.
And we're, of course, recording this on the 2nd of April. And it may be of limited interest to the listener, but I know it's of some interest to both you and I that there's something happening tomorrow that may or may not affect your mood.
Oh, yes, the Old Firm Derby. I had to rack my brain cells there, but yes, indeed.
As we're going to talk about later, your profile where you're copy trading is called the Moody Blue. Do you think there's going to be cause for moodiness after the event at Ibrox?
Well, let's hope not. It's a little bit like my portfolio a couple of weeks ago. It's in a critical state, and if it doesn't move upwards, then it could be curtains. So let's hope it does the same as my portfolio did.
Well, I think you've hit the nail on the head there. I mean, Rangers really have to win, or else Celtic will be 6 points clear with only 6 games left. 6 games after tomorrow.
Indeed, with a better goal difference as well.
And yes, and so Celtic are 3 points ahead at the moment. So no matter what happens, win, lose or draw, Celtic are going to be on the top of the league looking down on the Rangers. And the only explanation I can find is the form we have found since Ange has been around that puts us at the top of the league.
Indeed. At least he's not getting his homecoming tour, so that's not that bad. Well, not with Rangers in tow anyway.
Very good. All right, so let's get down to business and let's get on with part 1, shall we? The Moody Blue. More red than blue, what rings true? Lessons we can take from this experiment so far. So do you just want to fill us in a little bit on what this experiment is all about?
Indeed. Well, if we can just wind back into the mist of time, I joined eToro in 2019 and started by doing some copy trading, and it didn't go too well, especially in March 2020, when a couple of cadet PIs blew quite a lot of my money. So I kind of rebooted the copy trading experience because, like yourself, I feel that it's a really good opportunity to make passive income. So I decided to start a YouTube channel and review 100 PIs, starting with J Nemesis. Hello, Jay, if you're listening. And so after that, I made an Excel spreadsheet and followed the results of some PIs in sample portfolios. But that's quite a lot of work, and it doesn't provide you an accurate result. So I decided really the only way to do it was to make a real money portfolio, because unfortunately eToro's virtual portfolio has still got some bugs in it when it comes to copy trading. So what I did is decide to start this PI Gold Standard portfolio, for which I created a new account called the Moody Blue and decided $10,000 was a good amount. Mainly because 1,000 is quite insubstantial and doesn't give you a lot of flexibility, and any more than that would be quite a lot of money. You don't find that down the back of a sofa. And it also meant that if I was to lose, say, 10 or 20%, it wasn't a life-changing amount of money. So I thought that would be a good idea for a controlled experiment in copy trading over a period of time. And the important thing was to only have PIs in the portfolio, no crypto or other assets. I know certain other people have kind of deviated into that. And I didn't really see anyone on YouTube that had a pure PI portfolio for real money for a 5-figure sum. So I kind of saw an opportunity to do what I think is a quite unique experiment on YouTube.
Okay, and we're going to delve into that experiment, but just want to talk about one thing that you mentioned there, and that is that the virtual account is still full of bugs for copying people.
Indeed.
I see a lot of people complaining about this. I see a lot of people suggesting that it's a trick to lure people into copying. You know, I see these commentators and people on Reddit saying things like that. Oh yeah, don't look at the virtual portfolio. That's just a scam to get you to copy people. And I just wonder, why has that not been addressed? I mean, either fix it or take people out of the virtual account, because it's counterproductive to everything eToro is trying to achieve.
Yeah, it's a good point, Gavin. And I think that people could easily make bad investing decisions based on that. I would just say I don't think it's some sort of elaborate scheme by eToro to lure people in. What I think it is that certain types of assets don't track properly. Stock splits, for example, I remember copying someone and the VIX, I think, did like a 3-to-1 split or something like that. And my position went up by $2,000 on the virtual portfolio. And on the real money, that would have accounted for the split, but in the virtual, it doesn't. So that's can lead to skyrocketing. And also things like dividends, they just don't count at all. So that actually makes it look worse. And I think there's other bugs, but I don't know the full extent. But I think it's not a strategic thing by eToro. I think it's just that there's obviously technical issues in tracking the price of certain assets, especially stock splits and dividends. Maybe overnight fees as well as another one that doesn't properly track.
Absolutely. I'm not suggesting it's a scam or anything like that. But, you know, you don't want to give these people out there anything to hang those accusations on. You know, there's so many people are looking to accuse financial apps and the like of, you know, scammy, cheating, underhanded tactics. And, you know, why not just turn it off and just say, look, it's not part of the virtual portfolio. The other thing I hear is sometimes people are saying, oh, you know, we've got 20 million users, 20 million plus. We've got 1.5 million funded accounts. But we should focus on the higher of those two numbers, because lots of them are people who are using the virtual account before they go on to fund their actual account. Well, if the virtual account is delivering results that are so skew with, that's going to put off a lot of people, isn't it? I mean, why would you?
Yes, it's not great. And it has actually afflicted some even prominent YouTubers. I watched a YouTube video the other day by someone, a former guest on your show actually, who had said that she'd made a 720% profit on a position at one of eToro's smart portfolios. Needless to say, this portfolio hadn't made 720%, and this was because of the bug in the virtual portfolio, which this YouTuber, is a very good YouTuber, wasn't aware of. So I think that it's really dangerous that if people are thinking that that's what you would get with real money and making decisions based on it, and that's really the central problem with that. But it's not something I spend a lot of time looking at. Incidentally, my virtual portfolio balance is over $250,000, so it's a shame it isn't real money. But I don't know how much of that was legitimately earned or how much of it was due to small bugs in the portfolio.
Well, if anyone from eToro is listening, I'm sure they know about it, but we're going to repeat it again. I mentioned it to Sam Rudnick when he was on.
Sure.
This time last year, approximately, or not long thereafter. Okay, so let's move on to the Moody Blue. Gold standard criteria you apply. What are those criteria?
Okay, so what I had to do was really try and figure out, based on my PI reviews and also based on my own experience of making and losing money, is what did the most successful investors have in common and what did the people who had let me down have in common. And I came up with 5 factors that I think the trustworthy PIs, and I mean in terms of their investing knowledge and decision making, but also in terms of their character and personality. And I've come up with 5 factors, and essentially it's, first of all, a track record, because you can't make decisions based on someone's only been on the platform a few months. How can you make an informed decision? So I set a 5-year limit on that, which may be a bit excessive, but I put 5 years. Secondly, proven outperformance over that period. So I was looking for someone who had done well over that period, and didn't have huge concerning periods in performance that I was worried about would be replicated. Thirdly, that they were copier friendly, so that they considered copiers things like keeping a well synchronized portfolio, things like not depositing every month or not putting in unexpected large deposits. Also, strong communication, because I feel it's reassuring when you can see someone writing posts, answering questions in the comments, maybe even making YouTube videos to explain their rationale rather than having someone who's completely silent. So I put that in as a criterion rather. And the last one was quality assurance. And this was a difficult one, but I decided to go for Elite Plus, Elite Pros, because first of all, they've got a big skin in the game. Second of all, they have to sign a contract with eToro saying they'll stick to their strategy. Third of all, they've got more to lose in terms of reputation and strategy. And also they have to do the CISI qualifications level 3 and 4, which eToro asked them to do. So there's just that bit more assurance that they knew what they were doing. I'm not saying that Cadet and Champion don't, but it's a more grey area. So having those 5 factors was just a safeguard, like what Benjamin Graham would say, a margin of safety, that hopefully no one would blow up their account. And sneak preview is that no one has completely blown up their account. And that was really the first thing, was to safeguard my funds. All right, could I just add that after that, I added 5 more minor criteria, but they were just really to bolster the initial 5, but it's still really mainly based on that initial 5 criteria.
So if we think about what kind of PIs you were seeking to exclude from this, I guess we just take a look at your criteria. People with a short-term record, people who haven't outperformed, people who don't communicate, people who engage in risky behavior. Maybe you could tell us a bit more about what were the key things that you definitely didn't want anywhere near your portfolio.
Indeed. Yes. Well, if you look at the ones who lost me money in March 2020, they were both cadets, which is warning number 1. They both had shorter track records of slightly less than a year. They both were kind of the all green month variety, either by accident or by design. But also I noticed they were both deviating from the strategy. One of them was supposedly a ETF only all-weather investor, and he was doing things like trying to time trades on gold, which wasn't part of his strategy. And another one was supposed to be an unleveraged stock and ETF investor, and he started shorting the VIX with 2 times leverage for about half of his bankroll during the crash in March 2020. So it's looking for people who either were currently doing that, which is deviating from their strategy, or people who had previously done that in the past, which is a bit difficult because you can't really see what's went on over a year ago in great detail. But really just looking for those warning signs of people who had a strategy that I felt wasn't sustainable or who had taken huge risks. And that's not easy because people like Jay Nemesis and George Thompson have had big losing years. So theoretically, you'd say you would exclude them, but I feel that I know enough about them that they've moved on and that wouldn't be replicated in future and that they could be trusted. So it's not an exact science of saying if someone's had a big losing year, I'll never copy them. But that would be one factor I would take into account.
I'd love to get Mr. G on someday, if he's listening.
Yeah, I'm sure we would all love to hear George wax lyrical about his strategies.
He's a very interesting operator. And he's one of your final lineup, is he not?
He is indeed, because I felt that, first of all, he's got a really long-term, strong track record. And also he's very different, very non-correlated to the rest. He's something of a law unto himself. And it's probably not good to have 8 people who are just clones of each other. So he definitely stands out as being someone different, but extremely talented individual. And And the good thing was his gains in the last 3 years have been really strong. It's not based on gains that he's had many years ago, which he does have large gains from 7 or 8 years ago as well. But his last 3 years are really solid. And that is based on a trading approach rather than investing. So you can't just attribute that to the fact that stock markets went up. So he's not purely a stock investor.
And alongside Mr. G, who else have you got?
Okay, so the rundown is Wesley at the moment's the largest position, Mariano Pardo, Yeppy Kirk Bond, who's not copyable anymore, Heloise Grief, fund manager Zek, Steve Budgeon, he's a wild card, which we can talk about in a minute if you like, and James Campion, Campervans. So that's the lineup of 8 popular investors.
You say you didn't want to have 8 people who are all clones of each other. There are some differences there, some standout differences. Mr. G and Stephen Budgeon, I would say, and the rest are kind of you could be accused of a bit of a homogenous mix with the rest. Could you not?
I can distinguish between them if we just quickly go through them. Wesley these days bills himself as a value investor. Mariano Pardo is very much a tech growth investor. Yeppy is more of a worldwide stocks, including European. He's got more of a focus on that. Heloise is more tech focused, but does have certain hedges and uses a different kind of data approach. George, we've discussed, is a law into himself. Fund manager Zek, he covers all asset classes and he can also go long and short. He's very different to the other ones. Steve Budgeon is more crypto weighted, more constant, but also has other assets. And James Campion, although he's in stocks, he's got a long short portfolio. So I think there's quite a lot of difference in there. Okay, it's still largely correlated with the stock market, but I think there is enough of a distinction between those 8 that to the untrained eye, 2 of them may look similar, but there are differences in their methodology and also their portfolio composition. It's not just 8 tech PIs like clones of myself, which is kind of the sort of trader I am. So it's not just replicating what I personally do.
Okay, so a lot of big hitters in there, and the project has been running for how many months?
1 year. And just to say about the big hitters, although it might look as if I've just went down eToro's Elite Pro and just put everyone in, there are something like 11 or 12 Elite Pros, but there's also goodness knows how many Elites, maybe as many as 100. So it was something of a selection. Being an Elite Pro didn't automatically give you a free pass into my portfolio. There were several that I didn't put in.
So you must have made loads so far.
Yeah, well, if we want to come at the results, the great thing about this is that it's kind of, there's multiple ways of verifying the results. One of them is the eToro bar chart, which is there for all to see. Second one is the eToro line chart, which it becomes a lot less reliable if you're putting deposits in, which I was. And the third way is just comparing my balance to the amount I've put in. So you can see very transparently I've put in 10,000 and the current balance, last time I checked it last night, was about 9,100 and something. So I'm down by $850, 8.5%, which isn't great, but there are extenuating circumstances for that, which I'm happy to go into as to think why that has happened.
Well, other than the market movements?
Well, it's more a case of when the capital was put in. If I'd put the entire 10K in January 2021, I would have been well ahead now. Even if I'd put the whole 10K in April 2021, I would be well ahead. But what I decided to do was make it a more interesting YouTube experience and add 1,000 at a time. And unfortunately, the first one I added was Wesley, who's the one that's lost the most money. And people who have made money, like say Bees or fund manager Zek, I didn't start copying them until later on in the year. George Thompson only started copying in December. So it's not a case of a whole 10K has been invested for a year. The whole 10K has only been invested for 3 months. And I think we all know what's been happening in the last 3 months. It's not exactly been the most stable economic conditions. So I think timing could not really have been worse. But it's quite good in a way. It shows people that investing is a long-term thing. And if I'd got off to a fast start, if I'd done this in 2020 and made like 50%, then it would have been, yeah, it's all really easy to make money. But I think it's sometimes better to learn hard lessons that you do have to be patient and not be shaken out of your strategy. The main thing that I'm pleased about is nobody's done anything that I didn't expect them to do. Nobody's done anything crazy or different from their strategy. And I'm really pleased with that aspect.
Right. So here we are 1 year in, and as you say, it's a long-term project. So in a sense, is it a pointless question for me to ask, what have you learned from this year? Or would you do anything differently?
Yeah, there's still plenty of things I've learned. One thing that I've learned in a positive sense is I've always chopped and changed in the past, whereas this one, I have not stopped copying a single PI. I've only opened 8 copies, but I haven't chopped and changed. I haven't deviated from that objective. So I'm pleased at my own self-discipline. And also, I've learned that it's possible to have 8 of eToro's top investors, and I still believe there are 8 of the top investors all lose money at the same time. And you would think that on the law of averages, at least one would have made money, but it shows you, and I'm well aware of this, variance and statistical variance and standard deviation and stuff like that. You can get crazy results. Even people who are overall winners over a short period, you can get stuff like this happening where 8 people all lose money at the same time. So that just reinforced what I already knew about the nature of variance. And also in retrospect, I think that to make it a bit more interesting project, maybe I could have lowered the entry bar to 3 years instead of 5. And it just would have opened the door for people like Gaspar Sopi, Miyoshi, who've got a lot of time for both of them. Many PIs who've been between 3 and 5 years. I might have had them in there. And I did make a slight change to the rules with Steve Budgeon because I kind of realized it was getting a bit stale. So I did put one wildcard in. I put it to poll so that people could decide and livened it up by putting a wildcard, which was Bees 84, who I'm really pleased I added because I really like Bees and what he does. Another thing just to say on that is what I would have done differently. I did have an idea that I was toying with, which would be to have a portfolio only of cadets. So the Moody Blue, literally blue star PIs, and track them, up and coming stars of the future, track them from cadet to elite. But the problem with that one is it was be a lot more risk in that. So I went for the safe option of going for the higher end ones. But I think one for the future, if I ever did another project, would be to have a kind of X factor of PIs and try and choose cadets that would be really challenging and test my skills to identify a good PI. So I guess that's something that I've learned or that I might have done differently that would have made for arguably a more interesting project, but certainly a more risky one.
Okay, and let's just wrap it up with this thought or this question. I was thinking if someone's a relative newcomer to the world of copy trading and they're aware of your channel and you're clearly a very knowledgeable dude, you know what you're doing, you know all the pitfalls more than most, they might be disheartened by seeing the performance and thinking, well, if this guy can't make copy trading work, what chance have I got? What words of encouragement would you give to that person, or what lessons do you think they should take from observing this experiment?
Exactly, Gavin. You're right. That's unfortunate that people might look at it and think that copy trading isn't really a very good idea. I guess I'd explain those things I explained to you about why the results are the way they are. Also, that 1 year investing isn't a long time. And I guess I'd really just ask them is, do they think that George Thompson or Fund Manager Zek or Steve Budgeon or Heloise, do they think that these are awful investors, or do they think it's bad timing? Because it has to be one of the two. I personally don't think that they're awful, terrible investors. They haven't all of a sudden turned from being winning traders to all being losers. I think it's just a case of the timing window is quite short. So I would encourage them to stick with the project, keep watching, see what happens. And on that note, if you've got time, I'd like to make an announcement on the Moody Blue project, Copytraders Club exclusive.
Here we go.
Okay, I'm going to do this in the style of the UK Chancellor of the Exchequer, Rishi Sunak. And ladies and gentlemen of the House, over the past year, we've built a copy trading portfolio consisting of 8 of eToro's most respected popular investors. But we can do better. We can do more. So today, I'm announcing, as part of our Leveling Up campaign, and a show of faith in eToro as a platform, starting from next month and finishing at the end of 2022, I'll be increasing the size of the Moody Blue portfolio from $10,000 to $25,000. The gold standard portfolio will become the platinum standard portfolio. This will mean more top-ups for existing PIs, some completely new PIs added to the portfolio, and an expanded search for eToro's finest popular investors. Stay tuned for this on the FelixFallax channel, where you can view the progress of this project completely free of charge. I'll now hand you back to my right honourable colleague and right honourable gentleman, Gavin Alexander Boris de Pfeffel Macaulay.
Yeah. Well, that's exciting, putting your money where your mouth is.
Indeed, I do, as I said there, have faith in eToro as a platform and have faith in the people in copying, and feel the project's getting a little bit stale. It's not as interesting as I thought it was to just look at a fixed portfolio every month and say, oh, so-and-so's made $10 this month, or so-and-so's down by 0.5%. It's maybe viewing figures and interest has dropped off. So I think there's great merit in expanding it to a larger amount and seeing where that takes us by the end of the year. So stay tuned for that. It's a Copytraders Club exclusive.
Fantastic. And buying when prices are suppressed.
Yes, that factored into it as well, is that this is not the time to be, in my opinion, quitting copies. This is time to be adding more to the copies when quality investors, not as much as they were 2 or 3 weeks ago, they're down at the moment. So now is the time to be topping up copies. So yeah, I'll be injecting some capital at regular intervals, but not in a stats distorting way, only on the first of the month.
Fantastic. Well, you heard it here first, listener. Coming up in part 2, PIs on the rise. Who's hot and who is not. Plus improvements to how PIs are presented and what copiers should prioritize. Okay, part 2, PIs on the rise. Who's hot and who is not. Plus improvements to how PIs are presented and what copiers should prioritize. I thought we'd have a little bit of fun here, Andrew, and just have a little look through the publicly available information on eToro and see who's on the rise. There's a bit of a changing of the guard going on. We talked about the Moody Blue portfolio and Black Stars. Some of them have had significant drop-offs. There's other people who used to be big names are suddenly lost in the anonymous soup of PIs. But yet others are really bursting on the scene, previously unheard of people. So apologies for any mouse clicks here, listener, but we're just going to click around and have a look. I'm on the most copied page. I've clicked the top of the copiers change column. And if we can just have a look and see people who are in the 4 figures of copiers. So we look down that, and the first person we see who's over 1,000 is a guy called Hedge Fund. He's in the UK. He's got 1,215, a rise of 133.65%. In what period is that?
I actually haven't got the foggiest.
Over whatever period that is. You know anything about him?
Do I know anything about hedge fund?
I had a quick look at him. His portfolio is very much of the moment. There's a lot of defense stocks and oil and stuff like that. So he's part of the pattern of that you see of people flocking to people who are hot right now. As you can see, he's had a run of green months. 1, 2, 3, 4, 5, 6, 7, 8, 9 green months.
Yeah, what I would say, Gavin, is I think that one of the main things copiers are looking for at the moment is being in profit in 2022. So it's literally the last 3 months, what's now 3 months and 1 day, that people are looking at. Another thing, as you say, is all green months. It's worth noting that he beat the stock market by quite a lot last year. But overall, you're talking about a guy who's got only 1.5 years history, and his risk scores kind of 5 and 6 a lot of the time. And he's clocked up over 1 million and in terms of AUM, and has gained over 690 copiers in the last 7 days. So yeah, people are putting a major premium on this being in profit this year. And it seems to be that eToro are only putting people on the Discover and the Editor's Choice that have done well this year, probably unsurprisingly.
Well, that's kind of what I wanted to talk about by way of conclusion to this bit.
All right, okay. So
at a secondary stage, no, it's fine. But, is that a good idea? Who does that benefit? Is that to the long-term benefit of copy trading?
It's understandable why eToro would do that, because it's not exactly great marketing if they're saying, hey, look at all of our copy traders. They've all lost money this year. But the problem with promoting people who have made money this year but who don't have a long track record overall is that we don't know if it's sustainable. There's just not enough data there to say. We also don't know how someone who's handling a small amount of their own money and nobody else's money is going to deal with all of a sudden handling over 1 million of other people's money, getting paid a salary for doing it and expecting to post more often, answer questions. So it really puts a lot of pressure on that person very, very quickly. And some people react well to that and others don't. I don't personally know Philippos, so let's hope that he's one that can handle it and will go from strength to strength.
Sure. I mean, we can't draw conclusions really from just a quick glance at any of these people, just out of interest. Callan Trading from Spain is just below him. He's 1,022, up 130% also.
Indeed, actually, if we just look at Callan there, you'll see that's a very similar story to Philippos. I think that the major draw seems to be he's made money this year. That seems to be the because in 2021 and 2020, he wasn't doing anything outrageous. He wasn't beating the market. So it's really all about recent results, as in the last 3 months. Also, he's got a reasonable risk score and drawdown. So I think people are very much attracted to that.
Well, that's really going to be the story of this exercise. Everyone who's had these huge gains is going to have had a good 2022 thus far. Scrolling on down, Robier 89, who's in Kuwait, 1,590 copies, up 68%. So there's loads of these guys who are sort of have breached the 1,000 mark because of recent behavior.
If you look at Robier, he's almost like a clone of the other two in terms of like the first gent we looked at, Philippos, had made over 45% last year. It's done well this year, but before that, 2020, nothing special, and a huge loss at the end of 2019, which you wouldn't really read anything into because that's when you just set foot on the platform. But yeah, it's all this short term based on the last 3 months and being promoted by eToro on that last 3 months. People are piling in like a Black Friday sale.
Ingruk further on down, he's over 2,000 now. You featured him on your YouTube channel.
Indeed, yeah. When I looked at Ingruk in more detail, I actually felt that he, even though on the face of it, doesn't seem any different from the other ones we looked at today, was just really impressed by his overall risk control and drawdown and the composition of his portfolio, his communication, his qualifications and experience. He seemed to tick all the right boxes, apart from track record. He was someone, when I looked into in more detail, I was really impressed by, and I may well be impressed by the other three that we've talked about as well. I just haven't had a detailed look at them. But Ingruk, I think, is a really competent PI, and enjoyed making a video on him.
And that you also made a video on Analysis Cyclico, who's right up there, as is Triangular Capital, two names that are really mixing it with the big boys.
Yes, Analysis Cyclico. I think people really appreciate Forex at times like this because they know that generally volatility is not that bad for the Forex markets. That's because they're going long and short. So at a time where stocks are getting battered, going into a Forex trader seems like a good move. And he's got a much longer track record than the others, and also got a low risk score. So it's not hard to see why he's attracted to copiers. Triangular Capital, he's more of a stock focused. I was interested that he had a website where he had 10 years of history listed on there and a bit more about his strategy. So again, when I looked into Triangular Capital, I was quite impressed. Although all of those people we've covered there, they're attracting large amounts of people, and basically there's probably not a lot of difference between them, and you could probably find another 50 or 100 people in eToro with similar type track records. But it's really, I guess, who's hot at the moment, as you say, who's done well in 2022, who eToro's chosen to promote, who's appearing on the trending, and yeah, it remains to be seen whether they'll stick around. But certainly the three that I covered in my videos, Triangular Capital, Analysis Cyclico, and Ingruk, all seem the real deal to a greater or lesser extent. So I wouldn't have huge concerns about them, but generally I'm not really up for copying people who have only been on eToro less than 2 years.
Sure. Well, other people who seemed the real deal to lots of copiers a while ago seem to have dropped down the rankings quite a lot. When I first came across eToro and your channel, there were people who were big names who are really have gone very quiet. I was thinking
Indeed.
in terms of one girl has gone very quiet. Eddie B has lost his Black Star and has lost a lot of copiers. Can Zhao, you covered his sudden rise to prominence. Was quite sudden, I suppose, but it was mirrored by his drop-off.
Yeah, I think you have to look at them on a case-by-case basis, whereas one girl, she's long on tech stocks only, similar to Mariano Pardo, but maybe more speculative ones. I don't actually have any concerns about one girl because what I like is she's never shaken out by the market. She doesn't panic sell, and she has taken a hit this year. So if anyone that's invested in tech is taking a big drop, she's got some smaller cap ones. So I wouldn't have any concerns about one girl. Can Zhao, as I said in my videos, do have concerns over. Eddie B, I noticed he kind of changed his portfolio around recently. But yeah, it's a case-by-case basis. And they're all still there or thereabouts. If they were to pick up some more AUM, they could get back to the Black Star without too much difficulty. All it takes is a change of the wind and for people's sentiment to shift. Mm-hmm. But yeah, I think you really do need to drill down on a case-by-case basis and look at the reasons why did that person's portfolio drop and did their AUM drop because of them making a mistake or taking a gamble, or did it drop by just the natural movements in the market and copiers panicking and bailing out? And I think that's what's maybe happened in one girl's case is her copiers don't like 40% drawdown or whatever she's got, and they're quite taken by that. But I think if you're going to invest only in tech, then you've got to expect that and full faith that she'll recover, along with Reinhardt, who was on your show as well, would be another one. Miyoshi, Gasper Sopi, they've also suffered similar drawdown, but I've got full faith in all of those people.
And of course, we're not disparaging anyone here. We're just looking at the publicly available information, and as in eToro enthusiasts.
Indeed.
I thought it might be fun if I could put you on the spot and ask you to speculate who might be the next Black Star to be dethroned, other than Will Smith.
So technically one of the Black Stars already has been dethroned in terms of being copy blocked, but I won't go into that anymore. It really all depends. I haven't really been monitoring the AUM, but anyone who's closest to the 10 million could drop below that. Obviously people like, say, CPH Equities or Hugo Manenti think that they're mainly long on stocks, so that puts you at more risk, whereas maybe someone like Richard Stroud or someone that's more safe portfolio with low drawdown, there's less chance that he'll drop below that. But a lot of it depends on copier's moods. I could see that, say, Richard Stroud, he was over 20,000, now he's 12,000, so you never know how things are going to change. I haven't looked at the fact sheet. Some people like Wesley and Heloise, they're well clear. They're like 30, 40, 50 million, so I don't see them dropping out anytime soon. But overall, looking at those Black Stars, I'd be quite comfortable copying any of them apart from one. So I don't have any huge concerns. And if they did drop out, I'm sure they would spring back and rise like a phoenix from the flames.
Very politic answer there. Okay, so let's expand the conversation about popular investors. You think there may be merit in making it harder to become a PI? It's too easy to get into, like Jada Pinkett Smith's good graces? Yeah, well,
definitely. I'm seeing there's a kind of worrying trend of, even I gather eToro lets people on the scheme after 2 months, but that seems to in some cases drop to 2 weeks for some reason.
Yeah.
And there's people who really have no track record of any sort are coming strolling onto the PI scheme, admittedly only as cadets. But I think that there is some merit in considering even making it a year of trading history before joining. It won't be popular in some quarters, but I think if you're serious about doing this as a long-term career, being a PI, or even as a second source of income, then the idea of waiting a year before coming onto the scheme and just proving yourself for that year, I don't think that's unreasonable. I think that eToro would be able to make better decision-making in terms of who to allow onto it. So at the moment, I think, shall we say, a few infiltrators have slipped through the net. For example, one of my viewers pointed out there's actually a gentleman who's on the PI scheme under 2 different names. Same guy, just a photograph from slightly different angles, and he's rearranged his name in a slightly different order. And he's a cadet on one and a champion on the other account. And that's the sort of thing that if it was went over with a fine-tooth comb, that would become apparent that he shouldn't be on there twice, naughty boy. And there's another one who I covered in one of my videos who set risk score 10 and is still on the PI scheme. So there's certainly some tightening up I would do. And overall, I would rather have, say, 1,000 popular investors in eToro who were all, or 80% of them were high quality, rather than have 5,000 PIs and maybe have 1,000 or 2,000 that are really no business being on the PI scheme. So the more you have, the harder it is to find the good ones, because there's so much crap to wade through, frankly. Not mentioning any names. Again, it just makes it harder to find. So that's why I just don't bother looking at the cadet PIs, because you can just pretty much sneeze and it seems to be you're on the cadet rung of the program these days, as we've seen with some of the people that I've covered. So that's really one of the reasons why I stuck to elites and upwards, because they've at least had to do this 300-hour qualification to get on there and serve their dues of working up the rankings.
So 1 year minimum on the platform is one
maybe
criterion.
It's been suggested by some of my viewers.
And what about, I think you also mentioned something to do with the risk score during that period?
Yeah, well, this is a contentious. It depends on, first of all, whether you agree with the risk score, the way it works. But I didn't have a huge problem with the risk, the way it works. And I think at one point it was you weren't allowed to hit risk 7 for a year. If you want to join the PI scheme, you had to have a year of risk 6 or below. I don't think that would be the worst idea in the world. But yeah, there's a lot of people thinking that risk should be either tightened up or loosened up. I know we're going to be talking about that later. There has been a tweak to the risk score system. But yeah, there's possibly people on there that I believe are quite likely to do erratic things based on their risk score over the last few months that are still getting on the PI scheme.
Okay, and I believe you have some more suggestions for improvements that could be made in terms of ensuring quality control among PIs, particularly when it comes to credentials.
Yeah, well, it just kind of, it's part of it's backward looking and part of it's forward looking. But for example, there's one PI I see who said he's got 35% per annum profit over the last 20 years, which would put him as being one of the best investors of all time, if not the best. And I'm not saying that's not true, but I guess what I'm saying is, what's to stop someone just saying something like that? What proof is required? Do eToro check that in all cases? And you've got, on the other end of the spectrum, other people. I saw a PI the other day, a cadet level, thankfully, and saying his profit target was 10% per month. That's not per year, that's per month. So that's an outrageously unrealistic projected gain. And that's actually against the PI code of conduct to claim unrealistic gains. That PI would probably come back to me and say, well, look, I made 100% last year. I would come back to them and say that still isn't 10% per month because it compounds, and it would go back and forward. But overall, I think there's some people whose previous returns I'm going to cast doubt over, and there's some people whose future projections, like saying 100% per year, that I think are totally unrealistic and maybe could be doing with either not letting them on the PI scheme or asking them to change their bio, because that could draw in people that are of a more gullible nature. And I think those returns either were made or were possible to make in future.
Yes, and in all of these considerations, you have to think about the copiers and people getting drawn in. And one thing a lot of copiers are drawn in by, which is a particular bugbear of yours, is all green months.
Indeed. Yeah, the all green months is a huge problem, and it's something that's been going on for years. I had a good chat with a PI on my channel, comments, good going actually, who've got a lot of respect for. And he'd kind of made a post many years ago about something called grid trading, which is essentially what a lot of these people do. They start with a small amount at the start of the month, and then if things go for them, they pretty much don't do any trading and just finish with a small gain, which is not maximizing returns. And if things go against them, what they'll do is keep layering on bigger and bigger stakes, upping the risk more and more. And as soon as it turns in profit, just close down all trades with a small gain. So as you can see there, you're taking a large amount of risk to make a small amount of money. But because every trade's being closed in profit, and because there's a difference between maximum score and average risk score, it doesn't look as if they're risky, because they'll say, I've got a risk score of 1, what are you talking about? But then you'll see their maximum. For example, there's a PI at the moment who I won't name, who I think last month had a maximum of 7, but an average of 2 or 3. And the person's made less than 10% profit in over a year. but taking huge risks to do it. And that has led to them being featured in a national magazine, which I think is pretty good, pretty nice work if you can get it. But I think that the problem is these people will eventually come unstuck. And unfortunately, there's an elite PI who I've been following for years who I predicted might run into trouble. And he appears to have lost 20% in March after previously having all green years and also many, many green months. And he's pushed the envelope too far and obviously increased the stake size. And he's now sitting on a 20% losing month and a huge losing year. So I think he will not be getting his eToro certificate for 9 consecutive winning years. But that's the problem with these martingale stake increasing strategies is for a long period you'll get away with it. I could go to casino every night and put £1 on a roulette wheel and double it every time I lose. And I'll probably come out winning 10, 20, 30, maybe even 100 nights in a row. I would come out with a profit. But the problem is night number 101, I'd be leaving with empty pockets and everything I've gained so far would disappear out the door. And that's what a lot of people don't realize. Luckily, I'm come from a sports gambling and poker background. So I do recognize a martingale or stake doubling technique when I see it. And it's been used by far too many people on eToro. And regrettably, eToro is promoting some of those people even as we speak.
Yeah, so an all green month might look like the Holy Grail, but it's not necessarily the way to big profits.
Exactly. It's not at all.
And also, let's talk about this martingale and the grid system. Is it only ever used for Forex? All the examples I'm seeing of it are Forex traders.
No, it can be used. No, I've seen a couple of PIs, and one that I just mentioned there in the last bit that I was talking about. It can get used for stocks as well. Essentially, you can just open up, say, buy $100 worth of shares in Apple. If they go down, buy another $100 worth. If they go down, buy $200, $300. You just keep buying more and more. As soon as it turns in profit, even by 1 cent, you close it all. Voila, you have an all green month. The problem is that sooner or later, you'll end up with 100% of your portfolio in Apple with like a 40% loss, especially if you're using leverage. And that's when things start to get a bit hairy. And because as we know, what copiers will do is either hit their stop losses or voluntarily leave with a loss during those loss chasing periods. And the real problem with it is you're taking a huge risk and potentially a huge drawdown to make a very small amount, because that's the annoying thing is having put that big stake on, you don't even get a big result at the end of it. They just close down all trades, including unrelated trades that are not even related to that one that's just turned a profit. That gets closed and a whole bunch of losing ones get closed. And overall, you've got a tiny profit. But really, if it was taken to its conclusion and maximized, then it could have been a much bigger profit. So you're cutting yourself off at the profit taking end, but also at the risk of loss end of the spectrum. It's really just a bad idea.
I just want to pull you up on something there. You said that things might get a little bit hairy. As you know, I suffer from hair loss. So whatever you do, don't compare me to a very attractive millionaire from a successful movie about empowerment, or naturally swift and brutal violence will immediately be visited upon you.
Indeed, you're on top form today for topical gags.
Oh dear. Ultimately, what you do more than anyone is try and shine a light on all these aspects of eToro that will help copiers make better decisions. And to some small extent, I like to think that I add to your great canon.
Definitely.
But ultimately, copiers have to take responsibility for who they copy. So, if you could reduce it down to just a few bullet points of advice to copiers for things to avoid or common mistakes, what would those things be?
Okay, yeah, well, I guess the first one is take a step back and do your due diligence before copying someone. Really read through their previous posts, look at their trading history. Don't jump in feet first and copy, because it's easy to just see someone on eToro's editor's choice and say, right, that all looks great, I'm copying. So do that. Secondly, really think about what your expectations are in terms of how much profit you want to make, how much time you want to make it over, and how much volatility you can endure. For example, it wouldn't be a good idea to copy a PI like Jay Nemesis or Mariano Pardo. I know that Jay's no longer copyable, but just to use him as an example, to copy these sort of people and set a very tight stop loss, like 10%, because you're really setting yourself up for trouble. There's a high probability that at some point that stop loss will trigger and you will leave the copy at a loss. So you really need to bear in mind that there will be volatility and you need to hold through thick and thin if you're going to copy a higher risk investor. And that would be your responsibility. If you copy someone at the very top of their gains and then you leave at the very bottom of their drawdown, then that's not their fault. That's your fault. They probably have a winning record. You don't, because you've come in and out at the wrong times. And as we also mentioned, don't be, again, not financial advice, but don't be bedazzled by all green months. I would just put this final nugget of information out. Has anyone ever asked Warren Buffett, by the way there, Warren, how many consecutive all green months do you have there, mate? No one's ever asked that to Warren Buffett. And it's really, we need to be thinking in terms of years rather than months or days, and making our decisions based on long term. And that's why I'm not panicking with my Moody Blue project. It's only a year old, and that is not a long time in investing terms. So that would be the main consideration. Copy trading is for life, not just for Christmas.
And on that note, coming up in part 3, risky business, how the eToro risk score has fared in recent volatility, changes afoot, is it fit for purpose? How else should a copier assess risk?
Do you copy?
Do you copy?
Do you copy?
Do you copy?
Copytraders Club.
Copytraders Club.
Do you copy?
Do you copy?
Do you copy?
Do you copy?
Copytraders Club.
Copytraders Club.
Okay, so part 3, risky business, how the eToro risk score has fared in recent volatility, changes afoot, is it fit for purpose? How else should a copier assess risk? So this section, Andrew, as we know, markets have been up and down, more down than up, but a lot of movement going on. That has caused PI's risk scores to sometimes increase quite dramatically, even when they've done absolutely nothing to their portfolio, simply because of the way the eToro risk score is structured. Now, there have been some changes in that area because, as we all know, a PI's risk score has a bearing on whether or not they can continue to be copied. So here are the changes. Due to market volatility, eToro's investment office has changed the risk score policy at this current time. The new policy is as follows. Blocks from receiving new copiers will only take place for those with an average monthly risk score of 7, taking place at the beginning of the month for the previous month, or those that breach a max daily risk score of 8 and above, taking place daily. The block for an average monthly risk score of 7 will remain for 1 month for the first offence, and the block for a max daily score of 8 and above will remain for 2 months. So you get copy blocked for a monthly risk score of 7, or you get a max daily risk score of 8. In the first case, you're blocked for a month. In the second case, you're blocked for 2. That's it, right?
Yes, so what I'm taking from that is that formerly, if you touched risk score 7 at any point, you were blocked. Whereas now, if you touch 8 at any time, you're blocked. If you touch 7 and then immediately go back down to 6, then you will not be blocked. Whereas if you touch 7 and stay at 7, you'll be blocked. So it's relaxed the parameters of risk that you're allowed to have as a PI.
And they say this is due to market volatility, and this is the change of the risk score policy at this current time. So quite a lot of hedging terms there. Do you think this is just a temporary measure until market movements calm down?
Yes, I do, because in 2020, eToro did something similar, and it was a little bit different. What they said is, if you hit risk score 7, as long as you had 95% or more unleveraged stocks, then you could stay unblocked. So this time it's just a variation on that. What they're thinking is there are some PIs out there, some pretty big name ones actually, who have hit risk 7, but only briefly, and they're obviously thinking, well, let's maybe show a common sense approach, and these people don't really deserve to be blocked because overall they're not risky investors. So let's just relax it a bit there. Obviously, there's issues in terms of other people who were blocked just before that. The rule changed, and I think the main issue really is eToro's rationale is that we need to allow a little leeway. Whereas you can make the other argument and say during times of high volatility, you need to actually be encouraging people to take less risk and not allow them to take more risk. And if someone's portfolio was properly set up, you wouldn't have it as a risk 6 or 6.5 at a calm time, because you would know that it would go to 7 at a volatile time. So people should have been thinking and setting up their portfolios, preparing so that it would not hit 7 no matter how much volatility there was, whereas a lot of people have been caught in the hop and they'd been pushing it so close to the edge before. Now this year's volatility has just pushed them over the edge. Now that kind of is a bit of a kick in the teeth for people who have taken a safer approach and said, right, I'm going to keep my portfolio at risk 5, and in this has now pushed it to risk 6, so they're fine. Whereas other people who were just saying, I'll go risk 6, they're now going to risk 7, and whereas formerly they would have been penalised for that, now they're not being. So I guess if I was like a risk 4 or risk 5 PI, I'd be a bit peed off that I had voluntarily sacrificed profits to stay below risk 7, whereas other people who hadn't made any sacrifices to stay below risk 7 now were getting away with hitting risk 7 and the goalposts have been shifted. So I think there's some problematic aspects in there. I can see it from all sides though, because I do think it is problematic to block some of these top PIs. In fact, I'm looking at here at the moment people like Mariano Pardo, who I've got complete trust in. I say that he's risk 7, but I wouldn't say that he's any danger of capitulating and blowing all my money. So I think it's really hard to find the right balance.
Exactly. You're talking about two very different things. They're capitulating and blowing all my money. Mm-hmm. Permanent loss of capital. That's many people's definition of risk. The eToro risk score, I'd go as far as to say, is not many people's definition of true risk. So when we're talking about this, I think we have to understand we're talking about a metric that is used in the eToro system rather than an overarching threat of permanent loss of capital, really. I mean, if your risk score can spike and you've done nothing, you've held the same stocks for the last 6 months, and 6 months ago your risk score was 2 notches lower than it is today, even though you can still be buying more of these stocks at a cheaper price, therefore lowering your real risk, it really makes little sense.
Yeah, but the problem is the stocks that are likely to make your risk score hit 7 or 8 or even higher are these kind of small cap speculative stocks where you could actually lose 70 or 80%, potentially even all your capital. We've seen the Russian stocks have lost 99%. Those are the ones that in some cases are triggering people's risk score. I know one PI in particular who was risk score of 3 and now he's got a risk score of 8 because he's invested in Russian stocks and it's just shot it through the roof. So I think there is a genuine risk. If your risk score is getting 7 or higher, the volatility becomes so high that you are losing sometimes over half of your bankroll. And although it may come back, it may not come back. So the volatility in itself is a risk, because you can just automatically assume if you've lost 50% of your bankroll, oh, it's fine, I'm just going to make another 100% and I'll be back level. You might not be, or it might take a lot of time. So there's a relationship between risk and volatility. But I guess what some people's problem is on eToro, they're literally treated as being the same thing, when in actual fact, maybe there's other aspects to risk that aren't volatility.
Well, let's talk about that. Quite aside from highbrow chin rubbing about what is risk, let's talk about in real terms on eToro, things that you see PIs doing, what things that might constitute more risky behavior than the risk score reflects. Let's talk about that.
Okay, yeah, well, some of it includes using leverage. And I'll tell you how it works is, say if someone, for example, I'm not saying this has happened to any particular all green every month investor, if they had 400% or more of their account risked on one currency, the euro, let's just say, for example, and that wouldn't actually put their risk score up to 7 because they're using a stop loss. So the eToro system takes into account you're not risking all that capital because you've got stop loss. The problem is stop losses can overshoot because markets can shoot past the stop loss, and say if it's a stock, it can open, say, 50% down. So even if you've sent a 10% stop loss, you still will lose 50% if the stock opens 50% down. So these are sort of things, if I'm seeing people risking large amount of their bankroll on one stock or one currency, if I'm seeing people use leverage, if I'm seeing people abandon their bio promises, like if they've said, I will only use 2 times leverage and all of a sudden they're using 10 times, this is worrying. So these are the warning signs. It's not so much things that you can measure with an algorithm. It's human behavior of people doing erratic and unpredictable things, and which contradicts what they've said on their bio and their posts. And obviously you can't have a computer program is not going to know that this person said, I'm going to get all green months with low risk, and then they're risking 400% of their bankroll or currency pair. There's no way that eToro could design an algorithm to detect that. It's only really human eye that can do that. I guess that would be an argument for having a smaller number of PIs, but have them much more tightly vetted, especially the ones with 7-figure AUM, have people really dedicated team just monitor those people's behavior, because sometimes you can see warning signs that later manifest themselves into a complete capitulation, which did happen to one of the PIs I covered on my channel. And I saw the warning signs a few weeks earlier, and it turned out they lost over 40% of their copiers' money shortly after. But the risk score wouldn't detect that because it's a behavioral thing. It's not a statistical thing.
Yeah, it must give you so much satisfaction when these things...
Well, it depends on the individual who loses their money, but sometimes I feel very sorry for them.
Yeah, but for you to see these red flags and then predict what could go horribly wrong, and then within a matter of weeks it goes horribly wrong. That's why everyone should be watching FelixFallax videos.
And they should. But I think it's really interesting, though, because people become results orientated. Like, say, there's a book I read about gambling called The Greatest Show in Town, I think it appears in, and someone goes into Binion's Horseshoe, which has got unlimited table stakes, and they go in with a suitcase of $600,000 in a suitcase. They've got second suitcase is empty, and they put all of that money on black on the roulette table. So they're either going to walk out with double, they're going to walk out with over $1 million, or they're going to walk out with nothing. As it happened, they walked out with $1 million. So they probably tell themselves, that was the right decision, I did the right thing, look, it worked out. Whereas if they'd walked out with nothing, they'd be telling themselves, that was a terrible mistake, why the heck did I do that? But in reality, they've made the same decision both times. It's just the result that was different. So you see that a lot on eToro. There's PIs who've been taking these ridiculous chances and getting away with it. And people say, bravo, well done, you've finished in profit. And you've seen other PIs who have maybe taken less risk, but they've been really unlucky and been hammered and lost money, even though they only had their money exposed for a small time. So people tend to get very results orientated. I think we've got to actually look at the decision and the process, not just the result, because it doesn't always factor that way. In poker terminology, you can push all your money in with aces against 7-2 offsuit and lose. Doesn't mean you made the wrong play. It just means variance is at play.
Yeah. Well, as copiers, we have work to do. It's not a branch of investing that is completely outsourcing all the work. You've got to drill down, and when you see serious red flags, egregious behavior over and over again, get out of there before it's too late. Find another that suits who you are and what you need to be happy. And that's my final Will Smith reference. So next time a PI gives you the play, just remember my rhymes and get the hell away.
Indeed. And just to add a final thought on that is that's one of the reasons why I did the research on the Moody Blue beforehand and tried to find who I thought would be reputable characters, so I don't need to keep checking it every day. Whereas if I was copying a cadet with not much experience, I probably would be checking my account more often. So I think that doing more work at the front end, at the research stage, before you start the copy, means you don't need to monitor it as often once you start the copy. But still, I would feel more comfortable logging in and just checking every now and then that the situation hadn't changed. It's not necessarily the person's fault. It could be regulatory changes or eToro changing something that's actually caused the problem.
Well, there you go. FelixFallax in the house, dropping knowledge bombs left, right and centre. Andrew, as always, it's fascinating to talk to you about eToro and hear your thoughts.
It's much appreciated, Gavin, and keep up the good work with the podcast. I would also finish by saying that I'm a proud patron of the channel, and I know as a creator of content, it's kind of on YouTube a one-man band, that it's not easy to keep it going, and there are a lot of costs involved and not much money coming in. So yeah, definitely I'm proud to be supporting the channel, and hopefully other people will do so, and we can have a season 3 of Copytraders Club, which I will gladly appear on if invited.
Thank you so much, Andrew. Appreciate that. You'll definitely be back. I know that for sure. You've got your pass. You've got an access all areas security pass, so you can come and go as you please.
It's much appreciated. Hopefully your listeners do not get sick of the sound of my Scottish brogue.
How could they? And good luck tomorrow.
Thank you. We'll need it.
I hope you won't be too disappointed.
Oh, I didn't realise until today you were a Celtic fan, but...
Well, the extent to which I'm a Celtic fan is definitely been dialed up by the fact that you're a Rangers fan. So
it's good to have competition and rivalry.
All right, Andrew, take it easy.
Thank you very much.
There you go, listener. That was Andrew Hadden, aka FelixFallax. As always, a most enjoyable and illuminating chinwag with the most intelligent and likeable Glasgow Rangers fan I know. Admittedly, that's a very low bar, particularly when you consider their appalling behaviour at the Derby match, which, incidentally, Celtic won 2-1. But yes, Andrew is a top man. The link to the FelixFallax YouTube channel is in the show notes, and I urge you to check it out if you haven't already. That's all from me. See you on Discord and Facebook. Until next time we meet at Copytraders Club, I wish you many happy returns. Obviously, anything you hear in this podcast is for entertainment only, not financial advice. Do your own research. This is just generic chit-chat. We don't know the individual circumstances, etc., and so forth.